The institutions are coming.
They're coming. They're coming.
And it's happening before your very eyes. Right there, on-chain, large Fortune 500 companies have been launching their own crypto projects. In fact, according to a recent research report, the first quarter of this year saw the most adoption growth ever in history. If you want to take advantage of this monumental trend, then you need to know where to look. That's why you'll want to watch this video. Now, the research report in question was done by Coinbase, and it was released about a week ago. I will leave a link to it in the description for you guys to come back and read later. As we break down the report, I will also give you some of my own thoughts about it. But, as always, I am not a financial advisor in any way, shape, or form, clearly. So please consult your investment advisor before diving into the crypto waters. With that out of the way, let's get into it. The report starts over here with some high-level statistics. 39%, that's the increase in Fortune 100 companies that are launching on-chain projects. 56%, that's the number of Fortune 500 companies saying that they have on-chain projects. 1,000%. Now that's the increase in tokenized T-bills, and I actually had to double check and make sure that that checks out, and it does. Pretty wild. 150 billion, that's the total in stablecoin transfers. And 53%, the number of small businesses that are looking for crypto-savvy hires. And the not-so-pleasant statistic, 14%. That's the market share of developers the US has lost to other markets over the years. Now, the reason why some of these stats may have been flying under the radar is because most of the news flow over the past couple of months has mostly focused on spot Bitcoin ETFs. Now, while these have been massive, over $60 billion in AUM, much of the other adoption that has been taking place has been overlooked. Large institutions have also been aggressively expanding their tokenization initiatives. This real-world tokenization is something I actually talked about in a recent video on crypto narratives, which will of course be left in the description for you guys. One of the fastest growing assets being tokenized right now is US Treasuries, which now stands at over $1.2 billion. A great deal of that is thanks to tokenization projects by BlackRock and Franklin Templeton. Oh, and fun fact, the ticker for the BlackRock fund is BUDL, and the one for the Franklin Templeton fund is Benji. One of us, eh? The increase in use of stablecoins also makes sense. I mean, why would you want to pay 4 to 6% to send money abroad when you can just pay ETH gas fees or maybe Solana fees? Gas fee shade aside, data from the block estimates that the total stablecoin settlement volume could reach $10 trillion by the end of the year. But perhaps the most encouraging stat from this page is the fact that it's not only massive multinational corporations that see the promise of blockchain tech, but also small businesses. About 68% of small businesses believe that crypto can solve some of their pain points. I mean, this is pretty obvious when you think about it. For anyone who has had to rely on traditional payment services for their businesses, they know how high those merchant fees are. And then there are, of course, some of those businesses that can't even get a bank account. But I mean, that's a topic for another video. Anyways, from more encouraging statistics to slightly less encouraging ones, the US is losing dev talent. This was highlighted in an Electric Capital developer report earlier this year, which showed that only 26% of devs are now based in the US, and this is down considerably from a few years ago. How do we solve this? Well, how about politicians quit throwing shit at their industry? How about the SEC quits throwing lawsuits at them for writing code? Or worse, throwing them in jail? Rants aside, if you're enjoying this video so far, then help give it a boost with a like. Make sure to subscribe and ping that ringing bell so that YouTube can give you a ring as well. Lots of exciting Coin Bureau content coming your way.
So, ma'am, where exactly were you on the night of the murder?
I was right here, Detective, all night long.
You got anyone who can back that up?
You mean an alibi?
Yeah, that's the one.
No, I was all on my lonesome.
And what exactly were you doing all on your lonesome, if you don't mind me asking?
Well, keep it under your hat, Detective, but I was looking through the Coin Bureau Deals page.
What's a Coin Bureau deals page when it's at home?
It's only the place where you'll find the best discounts and promos in all of crypto.
What do you mean?
I mean, trade-in fee discounts of up to 70% and sign-up bonuses of up to $100,000 on some of the best exchanges.
Holy smokes! They got discounts on hardware wallets too, by any chance?
They sure do, Detective, like you wouldn't believe.
Well, that sure sounds kind of swell, lady, but just you give me one good reason why I should believe a single word you say.
You don't have to take my word for it, Detective. Take a look at the link down below and see for yourself.
She wasn't kidding. Those deals really were something else. Turns out that crypto ain't such a bad place after all. You just gotta know your way around.
Anyways, back to the report. This chart over here breaks down the number of on-chain initiatives by industry type in the Fortune 100. As you can see, they are predicting that Q2 of this year could see up to 20 companies launching projects. That's the most ever. They are still missing a few months of data though, but that's a minor detail. Another important stat here is that most of these initiatives are in their advanced stages, 59% of all projects. And more companies are talking about crypto in their SEC filings. This number also hit an all-time high in Q1. That aside, what's perhaps the most interesting is that although there have been a lot of companies in different sectors that have experimented with crypto, those that are in tech and financial services seem to be the predominant companies adopting it, at least right now. You can see the breakdown of the use cases over here. It's quite clear that payments, trading, and ETFs are driving most of the use cases. Anywho, an encouraging sign is that these Fortune 500 companies are dedicating more resources to their crypto initiatives and are going to be spending a lot more money on it. Here are some of the reasons as to why they are bullish. But they also mention that there are challenges to rolling these out. Again, top of mind is that lack of talent that we mentioned earlier. And that's closely tied to another big concern, lack of regulation. It just goes to show a regulation by enforcement is a farce. Moving on, this next section also has some juicy figures. 7 out of 10, that's the companies that are interested in learning about stablecoins. 86%, that's the amount that see the potential benefits of asset tokenization. And 35%, the number that say their companies are planning tokenization. And over here, they have a breakdown of what these Fortune 500 companies think the benefits and use cases of this technology are. They seem to place an overwhelming emphasis on speed, as it's mentioned as the primary benefit for both technology classes. And second to that is costs. Interesting. Over here, they talk almost exclusively about stablecoins. According to remittance data from the World Bank, stablecoin transfer volumes hit $10 trillion in 2023, and that's over 10 times more than remittances worldwide. And here's another mind-blowing statistic. The amount of treasuries held in reserve by Circle and Tether are greater than those of the holdings of countries like Norway, Saudi Arabia, and South Korea. They do mention that it's surprising to have seen this growth despite the lack of clear regulations around these instruments, which is something I tend to agree with. What I don't tend to agree with, though, is the fact that Tether has purely grown because of the regulatory vacuum it has operated in. Sorry to say, but it's mainly because people prefer USDT as a stablecoin. Sorry, Circle and Coinbase, check your bias in your reports. Here they have 2 examples of case studies with coins that have been launched in the past few years by Fortune 500 companies. Firstly, there is PYUSD that was launched by PayPal and later on Venmo. Now, this has gained an impressive $400 million market cap in a matter of less than 10 months. I'm curious though, have any of you used the PYUSD stablecoin? Because I haven't personally, but it seems to be gaining traction, so I'm keen to hear from people who've actually used it. Another case study is that of JP Morgan's JPM coin. If you will recall, JP Morgan first rolled out their Quorum blockchain back in 2016. It's basically a permissioned version of Ethereum. It was one of the first enterprises to use a permissioned blockchain, which is kind of funny when you think about how anti-crypto Jamie Dimon is. But be that as it may, Quorum evolved into Onyx, which uses JP Morgan coin or JPM coin as an interbank settlement currency. Given that it is permissioned and not public, we don't know exactly how much has been run on it. But according to some bragging by JPM executives, it handles $1 billion of daily transactions, and they expect that to rise to $10 billion in the next 2 years. The next section is all on tokenization of assets that aren't stablecoins. Quite simply, real-world assets. If you watched the aforementioned video on crypto narratives, you will have seen me quoting a BCG report on RWAs. In it, they predicted the tokenized asset market to grow to $16 trillion by 2030. For context, that's the size of the EU's GDP. Mind blown. To be honest though, they should just tokenize the entire EU economy. Verifiable growth metrics on-chain. Now, the growth of non-stablecoin tokenization has also been quite impressive. According to data from Dune Analytics, it hit $3 billion this year, which is roughly a doubling from 2023. This could even be an underestimate given that many of these tokenized assets are not on public chains. Part of the reason that T-bill tokenization has been such a success is because of the higher rates environment over the past year. We're at 30-year highs. Investors are looking for open, transparent, efficient ways to own these assets. After government securities, the next most popular asset for tokenization is commodities. I remember back in 2019 when Paxos's PaxG tokenized gold first hit the market. There were many other projects which were looking to allow the physical redemption of this yellow metal. Indeed, Tether also seems to have jumped into the tokenized gold market, with just a few days ago the release of XAUT. The third most tokenized asset is loans, i.e. private credit. According to data from Dune Analytics, this went from near zero in October 2020 to over 400 million in April of this year. Over here, they have a chart of the market cap of all tokenized government securities by issuer. As you can see, there is a jump in BlackRock's share, and that's just because they made a large strategic investment in Securitize, one of the most prolific issuance platforms out there. It's a pretty solid move by BlackRock, I must admit. Larry Fink is taking over. Moving on to the next section, and this is one of the most interesting of the whole report. And that's because it looks at the in-real-world perceptions of crypto from small business owners. As mentioned earlier, many of them are looking for crypto experts in their hiring procedures. But beyond that, half of these small businesses think that adopting stablecoins will open them up to new business, which of course does make sense. And that's because transaction fees and processing times are a massive pain. About 68% believe that crypto can help address one of their financial pain points. Over here, they go through a few small businesses and projects using blockchain. One of them is a COA, which tokenizes health records. This actually makes sense when you think about it and consider that these records have to be permanent. It also allows public health officials to get a snapshot of general health among the population. Another project which they mentioned is Banku, which helps small farmers get access to the financial system through blockchain, counting, payments, etc., etc. And then there is a company called Queen of Raw, which is a pretty cool name. Now, this leverages blockchain tech to help companies track their inventory and ensure that they are making the most of the fresh produce before it goes to waste. Finally, they have a pretty cool case study over here of Compass Coffee, which is a coffee chain based in the Washington, D.C. area of all places. They lose revenue every year to those credit card processing fees, and they have entered a partnership with Coinbase Commerce to offer stablecoin payment options. Perhaps if there are any lawmakers dropping in for their soy lattes, then Compass Coffee can preach the good word of crypto to them. Okay, it's now time for the most important section. What does this report tell us? And what do we think about it? Firstly, it's incredibly encouraging to see that real-world institutional adoption is not just a meme. It's actually happening. And it's not just buying crypto and holding it. It's using the blockchain to issue securities, make payments, and solve numerous different pain points these companies have. I mean, to have 56% of Fortune 500 companies developing on-chain projects, the majority of which are in a late stage, is something I really never expected to see. I also expect this trend to only accelerate in the coming years, and this is especially the case for those on-chain treasuries. I also want to see extensive growth in other fixed income assets and securities, such as corporate bonds, private credit, and other types of loans. That's just because they are a fully transparent, immutable record of the loan. It's also really encouraging to see that there are smaller companies and businesses that see the need for crypto and blockchain tech. All of this being said, there are still challenges. I mean, for one, there is the fact that the predominant use case still seems to be for payments and tokenization. There are many other use cases for blockchain, and it would be great to see these companies explore them. It would also be good to see companies outside of tech and financial services using blockchain. They were happy to experiment with it in previous quarters, but appear to have sat the most recent quarter out. Finally, it's also clear that there are challenges posed to broader adoption. These mostly center around regulation, where the lack of clear guidelines has not only led to a hesitance of continued adoption, but also a slow bleed of talent overseas. The war on crypto is leading to an unfortunate attrition. With all that said, what does this broader trend mean for us in the crypto ecosystem, and how can we benefit from it? Well, what this report has clearly demonstrated is that the RWA space has some strong potential. However, most of these projects and initiatives appear to be on the proprietary chains of large companies, JP Morgan, or issued on large public networks, a Biddle fund on Ethereum, for example. However, there are a number of RWA projects out there that operate as a sort of intersection between large corporations and retail. Ondo Finance is still perhaps the best example here, and it is the third biggest issuance platform after BlackRock and Franklin Templeton. There is a governance token attached to it, but it has no use cases apart from, governance. So while it may be an interesting beta play on its growth, do note that it's not guaranteed. The same can be said for Maple Finance and many other open issuance platforms. But if you aren't as keen on betting on governance tokens of newer issuance platforms, then you may just want to consider buying the underlying infra most of these tokens are issued on. And currently, this appears to be the Ethereum blockchain. So is ETH the ultimate RWA play? Well, there are many other factors that you should factor into an ETH investment, and we actually have a video coming on that in the next few days, so keep your eyes peeled for that. And that's it for my video today, but it's not complete without your all-important feedback, so let me know. What do you think of the RWA space? Do you think that corporations will continue the adoption? And what are your favorite RWA plays? Let me know down in those comments below. Either way, I hope this video was helpful. Give this crypto champ a like if you liked it and a sub if you loved it. Oh, and don't forget those notifications. You don't want to miss what else we have coming through. Cheerio from this crypto bro.